Week 3 is here and we will be heading for a shortened trading week as US markets will be closed for trading today. In the $1,000 challenge, I went into NEO last week. That did not pay off very well. We will get back to that a little bit later. You are listening to the StockInvest.us podcast, Trading Tips with Jim. And as I said, week 3 is here and I will tell you what I think will happen during the week. Among other information at the end of the podcast, of course, get back to the $1,000 challenge that last week was up more than 50%. But what about this week as I went into NEO last week? Markets was indeed good, especially for Nasdaq. Nasdaq up over 3% last week, ending just below 15,000 at 14,973 points. So my guess for a good week was correct, and as I said, even though the signals were at the upper end, it was a fair chance for a good week. Dow Jones also was green, but not as much for Dow Jones, up 0.34% for Dow Jones, ending at 37,593 points after being up 177 points during the week. S&P is, by the way, very close to all-time high, so this week we might set some records. On the other hand, things are happening in the world, and will the gain continue? Questions to answers, questions there to try answer. I will do my very best. First off, and as a context, as a background for all of it, so what are the main things that is happening in the world? Last week I told you I thought especially it would be the end of the week that would be volatile because of inflation numbers. It was the consumer price index numbers, the production price index, etc., and consumer price index numbers came in at the upper end. And for those watching the news, they probably saw that they were spitting out the lower of the interest rate hikes, as promised in 2024, may be delayed. No news if you listen to this podcast, and I hope that you do and you continue to do so. If you like it, please like it. If you're watching the YouTube version, click the like button, and please share a comment or ask questions if you have any. Because as I told you, inflation will remain stronger than people think. Yes, it is heading down, but it's far above the target. And last week I just introduced the thought of maybe they want to keep inflation high to eat up the insane debt that is accrued in US and Europe. And by the way, checking news this morning, and I always follows news, sometimes just reading the headlines, and if I find the headlines very interesting, I dive deeper into and I try to listen also myself to good podcasts, and there are several good podcasts out there, or YouTube casts for information. And in one of them, I cannot remember exactly which, was a small thing about Africa, which I haven't been thought of. Of course, I mentioned I don't know which podcast, because now it's the 5th year of doing this podcast, and it must have been a few years ago I told you that Africa is a very interesting place to be in terms of having all the raw materials, and the fight where China is slowly taking huge parts of Africa, owing rights in Africa, and that there will be a fight over raw materials. Now, digging through all this information that I like to dig through, and here comes one thing: you have to be critical. Just remember that you have to be critical. Take everything with a grain of salt, because there are articles pushed by an agenda. Even though if it's written by professors and institutes, they usually have an agenda. Best example of this is back in the days where tobacco was fighting to survive, and there was tons and tons of scientific articles coming out that tobacco doesn't hurt your lungs, which we know for sure is not true. It was false then, and it's still false. But a big corporate, in this case, the tobacco industry, was able to buy these articles, these scientific articles, to try to convince people and change opinion and all these things, and that is very valid still today. So in terms of financial data, it's just the same thing, and I have this one rule which works very well if you're very confused. If something sounds too good to be true, it's usually the opposite case. The other rule is that if a stock is being pumped by news, the big investors are usually selling out. So if there's tons of very strong news for a company, like over the top estimates by analysts, etc., I usually think, well, it's a good time to sell, because now they are just pushing these articles as the big ones will try to reduce their portions, their sizes, secure profits, etc., and they cannot dump that sort of amount of shares onto the market without having a huge fall in stock, unless they're able to pump up the volume up front. And here comes that beautiful thing about technical analysis, volume, which I love. I am absolutely trend and volume lover, and volume is absolutely one thing that will tell you when certain things happen. The general term is that the volume should follow the price. If the price go up, the volume should go up, and if it goes down, the volume should go down. If there is a divergence, volume go up, the price go down. It tells you that there's a changing point, etc. Volume is a little bit more complex than this, but it's an amazing nice tool to watch, and you should, for your sake, dig also into that. Now back to the Africa, and what I wanted to tell is that because I've been focusing in these podcasts, and sometimes I feel like I sound too negative. I say to you that the debt is accruing. We have BRICS moving away from paying for oil in dollar, and I warned you that the Ukraine war would come and all of these things, but my intent is not trying to be negative. It's trying to tell you what I think will happen. I've been lucky so far. Most of the things that I said turned out to be true long before it even happened, and because it gives you a better funding for your investments decisions. At least it gives for me. So trying to understand what are the things that moves, what are these big lines, because then we can position ourselves into these big lines, that we reduce the losses, and hopefully we increase the gains, because we are maybe in the right correct trend. And we will stay there. Now the bet into NEO, we are jumping a little bit back and forth here, but the bet into NEO last week, and I argued a little bit, but I still believe in green technology. It's not the right time for green technology now, but I want to be in before things happen. I wanted to buy NEO last week, for instance, in the $1,000 challenge, because I thought it would have a decent week, pulled up especially by the end of the week, but that didn't happen, and we will get back to that in just a second. But being ahead of trends enable you. That's why long before the Ukraine war started, I told you there would be a war. War industry would be the place to invest, and anyone who invested into war-related stocks, well, congratulations, like me, you made quite nice profits. Now back to Africa, and the one thing about Africa that I didn't think of, I knew Africa as a good case because it's emerging economies, meaning that they are growing up, economies that are growing up. So, and they have raw materials, they have a lot of things going on for them. It's one of the most best countries in the world, actually, continents in the world, in terms of raw materials. They have a lot of good things going. The only thing is that they're totally messed up, of course, in infrastructure, politics, and all these sort of things. But slowly they will adapt and evolve. Like most other, it's a way out of things, and they're slowly moving up. So the one thing that I didn't fully comprehend or understand, didn't have the knowledge about it, but now I do, is that there is a fact that Africa, for instance, only has 9% debt compared to GDP. And that is super interesting. It's super low if we start to compare with Europe and America, and understanding that, for instance, America use 11% of all their income to pay interest rates on their debt, and Europe is not far behind. Many countries are even worse than that. So we understand that go to Africa, they probably have a huge upside, and this is moving more into fundamentals, not so much about how we read charts, technical, etc. Here we're talking more fundamental, basic things. It's easier to grow if you have a lower debt limit, because Africa can loan much more money, but you have to invest it, of course, properly. So that's like long lines. On top of this, there is weekly happenings that is happening, so-called economic data, and this week there is no really big economic data coming in. It's the jobless numbers that will come in on Thursday, and the focus is more and more on jobless numbers because a company like Google just fired a lot of people, and the big tech companies are continuing to firing people. The AI revolution will cause more firings, of course. I think I saw a study where 30% of all the companies that was interviewed in the survey expected to reduce the workforce by 25% or more, based on AI taking over a lot of responsibilities. And I feel I've said this before also, but now in a phase where you fight for higher salaries, which we do understand is good, you also have to understand that the salaries, they will have to be paid. So when the car auto industry in the United States got insane huge increase in their salary, the cost will come somewhere else. Someone has to pay for it. In the end, it will be you, the end consumer. Cars will be more expensive. It's just how it is. The business, Ford or whoever it is, GM, they can cut a little bit in their profit level, but every single company anywhere, unless it has subsidies from the government, and that is why governments usually do very bad in absolutely everything, has to survive from profit. They have to make profits. It's only in the government where you can do whatever you want and you can go to any sort of deficit and still continue doing your shitty business. It's only government, and that is why government in general is an issue. Slightly political there, but if you compare a governmental kindergarten with a private kindergarten, you will find in almost any case the government kindergarten is worse than the private. And then you can start to shit the blame everywhere, but it's just a fact. There are no real strong motivation behind running a governmental kindergarten optimal. There is no need to keep parents happy because they will get the funding anyway, and in very, very seldom cases there will be any consequences if a parent or five complain that the fruit is not green enough or your outdoor equipment is not good enough. Nothing will really happen other than some yata talk. Anyone who is parent who has been in that situation between private and governmental know that I'm speaking the truth in this case. While a private kindergarten, well, they cannot handle parents going a bollock over the lack of fruits, so they will have to provide the best fruits. And if the outdoor equipment is not good enough and the parents are arguing, so they will have to improve the outdoor equipment. And over again in any sort of survey, they just keep doing better. Private sector keep doing better, but they cannot offset cost to government. They have to get either increase the cost on you, the end consumer, and that can cause changes. They cannot push the prices too hard up, but in the end it's always you who end up paying more. So when and they argue for all of this, so when the prices go up a lot, there is just a certain amount you're willing to pay before you start stopping, and that struggles all the sales, and you go into a bad circle. That is how economies usually go into recession, etc. You start the firing process and things just get worse and worse. It's just an endless loop. It has repeated itself through all history and will continue moving forward. But the thing about like AI, and AI is not as scary as many think. It's a beautiful tool, and it will continue, but it can do a lot of services already, and it will just increase. And AI is a fixed cost. You pay a certain cost and it will just do the work. It will not ask for salaries, it will not ask about working hours and all these things that we take for granted. And by the way, if you are sitting now almost boiling and thinking, oh, he don't care about social and socialism, and just look how Norway, how perfect everything is. Far from perfect in Norway. Any Norwegian listening to this know that that is case as well, and we have the oil fund to fund all the wrong things that we do, but most country, and for sure most companies, do not have that. I am not against these things. I love workers' rights and all these things. I just tell you there are consequences, and one of the consequences of the inflation, one of the consequences of the introduction of AI will be that we see more optimized working places. They will have to optimize, they will start to cut. Even JP Morgan, these big ones, are cutting, laying off people, by the way, because why would you want an analyst when you can today get very, very strong analysis from AI, and it will continue to get even better. And here, small sales pitch, remember that at stockinvest.us we already offer you AI analysis, and we will continue that journey to make these products even better for you. And we have to understand that a language model, even though it's just a language model, AI has such a huge knowledge base. Now, starting to get a little off track, but work numbers will be important, and they are very important, and more and more are starting to pay attention to this. So very soon we will again see job numbers starting to sway the market. The market will move. They already have, because if market is tight, we have seen a little drop in the share prices, etc., because they know that, okay, that means a tight labor market, which means that there will be a pressure on economy. And since I do not follow a script in this podcast series, I simply do not have time to sit and make a proper script. Maybe I should, but I do not. Sometimes just things pop in to mind. And right now I was thinking that I forgot to tell you that. So we have inflation, and as I said last week, the inflation number was higher than expected. And there might not be interest rates. And you heard me argue for this. Just remember that the things in the Red Sea, the Mediterranean, which currently is escalating more and more, can cause total blockage. Already a lot of ships are going outside the channel, but still, such a huge part of traffic is going to the Suez channel. And more, now they start to go outside. That is a longer run time, it's longer time to the market, it's more cost. This cost will of course be put on you, as I keep saying, on you. You as an end consumer will have these costs. And if it gets to a total hammock down there, well, then you can just expect energy prices, because we already see oil moving, keeping base, even though Biden is trying to push all the oil that the US, they still have some left, but is emptying the strategic reserve, not being able to refill them to try to hold the energy prices. But energy prices, and even those OPEC plus increased oil price, keep staying high. $73 for the oil right now. And if more shit happens down there, well, then we can expect prices to increase even more. High interest rates means that there is other items than stock that you can invest into, get a proper nice return with a low downside. Now, so work numbers, and this was a long argument into the one thing that I want to say, that job numbers will keep matter more and more. And since we follow mostly US markets, I can tell you a little bit about the other markets, but the trend is very much the same. The economies are being stimulated by adding more governmental workers, which never is good for any economy. It just increases your cost. It doesn't increase your income and revenues. So work numbers, and this week it will be Thursday, is the main thing. And I think that keep an eye on these things. Because it will play out. About that economy. As I said, there are some other economy numbers, but they are really nothing that will matter. There is a few quarter results coming up this week. The end of last week was the big banks, of course. There is a few this week. You will have them in just a second. But about quarter numbers, I saw another survey where several of the CEOs are starting to warn about their Q4 numbers not being as good as expected. I warned you over and over again and urge you to do that. Check when your stock has quarter results so you don't get in for a big surprise. Hopefully it will be a positive surprise, but in many cases it's a negative surprise. Know when your company has quarter result so you don't be taken by a surprise. And if you have a nice profit and you think, well, so maybe you should realize some of it before quarter results if you're unsure how it goes, and at least read the last quarter results and the CEO statement. That's a very important thing in a quarter result because it gives forward outlook, which is the one thing that people... But as I said, in the survey, many of the CEOs says that the for Q results will be under pressure. JP Morgan, however, they did insane good. I think they set the record income, if I'm not mistaken. This week, tomorrow, will be Goldman Sachs, Morgan Stanley, and PNC Financial and Interactive Brokers, the broker that I use for most of my stock trading. I have a few others, but that's my main broker. On Wednesday, there will be Charles Schwab, more banks, and then Aloka, Discover, US Bancorp, and Kinder Morgan, and a few more, nothing special. There is a few more on Thursday, but nothing really big. KeyCorp maybe, M&T Bank and Northern Trust are some of the quarter results. If you wonder when is my company having a quarter results, go to stockinvest.us and you will find a warning for when the quarter results is. If your stock has, we will push a warning 6 or 10 days before. I think it will says on. There is other sources as well. And just to repeat, if you like this podcast so far, remember to like it. If you're watching on YouTube, and write a comment, will just help it grow. Now we are heading for the end, and which will be the $1,000 challenge of course. And I've tried a few different formats in this podcast. I always think about, so how should I present these things? Should I just present it like this? Should I make it into some sort of story? Should I keep a storyline through all of these podcasts? But I chosen to be heading also to the direction where I share a little of my private and personal life. And those following knows that sometimes I post pictures from the things that I find when I do metal detecting. I love this. I had the pleasure of showing you silver coins which I found, rings which was the last I found on New Year's Eve. I think that was in the first podcast of this year, showing that ring. And other things, and keeping you up. Right now it's just too cold, it's too much snow, so I cannot do metal detecting when I have the chance. It will still be, I guess, a few months. I might start polishing a lot of the finds that I found last year. But there is other things than metal detecting doing. And I have a son who I love go to the gym, by the way, and been doing that for many years. Not taking it too serious, I just like to go and keep somewhat in shape. But I have a son who suddenly caught interest for going to the gym a few years back, and he has some amazing results. The results that young people usually can get. It has something to do with how you break down your proteins, etc. We'll not go into that here in a stock podcast, but having a son doing so good, and I am his father, so it pushes me a little bit. It pushes me, and now I'm trying to make volume muscles. So that's, if you was interested, maybe you were not, but that is one of the things that I challenge myself in these days. Taking advice from my son, because you should take advice from those who know better than you. And I have to acknowledge that my son, in the case of training, knows much more than me. So right now I'm asking my son, it's that kind of age where your kids get smarter than you. And it's a good thing. Find always a good source for information. Ask those who are smarter from you. Learn from those people who are smarter from you. That is why I love going through all sort of news articles. I watch and I follow a few people which are indeed very, very smart. Was it smart to follow the $1,000 challenge last week? And I know some of you did, because you messaged me on Discord, on private message, and a few other places. You sent me a message. And you already know that it was not smart at all, because for instance, I got into NEO at 785. Posted on YouTube as promised last Monday when I bought. I would post, and I posted 785, and then NEO went up. I think it was just about 8. Everything looked like it was on the right track, and then started to go downwards, ending the week at $7.17, down 8.66%, of course hurting the huge gain that we had. And we are here to try and make the $1,000, which was $1,500 last week, grow as fast as we can. That is the intent. I want to double, triple, and quadruple this money, and we will continue to do so. The question is now, what do I do? Do I go out of NEO, or do I stay in NEO about this $1,000 challenge? I still think there is a shot in NEO. Of course, I can regret about this, but I told you it's a certain risk associated with these things. Right now, green is not at all the place. So I think it was Hertz who sold off tons and tons of their electric cars, taking a huge loss because there are so many issues related, like driving length, battery capacities, of course, and charging stations, and all of these things. There is a lot of things, but as I told you, lithium is getting cheaper, very cheaper. Car prices will get cheaper, and there are many arguments why there is something. But right now, there is not the green is not on the political agenda. Because politicians, they are like, sorry, and I'll just say beep, 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 beep. Maybe you know what I think of. They sell themselves to the highest bidder, and if green is not gaining any popularity, traction in the people, they just flip their mind. They need your votes. So that, in fact, just a few of them have the real stomach, the real moral and backbone to back up their true beliefs and be a real politician. Most of this is just they're just there to get your money, the attention, and feel the power that politics give. So we see a lot of shifts all across Europe. I read every single day about some green alternative being put on hold. Norway bought tons of buses, electric buses, headed into big issues when it was too cold, so now they revert the stations, and yata. But as I told you, and I will keep this statement over and over again, green is the future. It might be broken back right now, but it is the future. No matter what happens, we will get there. It's simply because it was pushed tons of money into green, and green was a raw product. It was hyped up. Now green faces the challenge that any business do, which I spent so much time in this podcast talking about, the demand for efficiency in private sector. So green not getting the same kind of subsidies from the governments, they will have to change their products accordingly. They will have to optimize, they will have to be better. The solar panels have to be better, the cars have to be better. Subsidies are going away, so they will have to compete on the same level that fossil cars. And that will just make them even better, and they have so many of the advantages already. They do actually have a better economy in the long term, and that will just improve by time, because it will be cheaper with electricity, unless something magical happen. Electricity and batteries will get longer, so the green will get the way will come back. I'm not sure. Will it be next month? Will it be 5 years? Don't ask me. I just know that it will be back. So, but that NEO trade is for short-term swing. I just believe that there should be an upside up to 10 for NEO. I hope I'm correct. We'll just see. Even Tesla is being hammered as we speak. So to that end, I will stay in NEO. Also this week, I will post when I sell. I will tell you when I sell. I will not buy any shares before telling you first. Now there is holiday in America, and I hope that you will have a beautiful holiday and spend the day very wisely. To all my other friends, and I know a few of you are sitting here in Lithuania. I'm sitting in Vilnius, and Vilnius is not the biggest country in the world. 2.56 million people or something. Can drive from one end to the other in 4 hours. That's how small it is. Take Norway, only 5 point something million people, but the length of the country is insane. It will take you 3 days to drive from one end to the other end, almost, unless you're speed driving, which is very hard in Norway because it's a lot of curvy roads, not so many straight roads. Lot of yata yata at the end. I hope you, my friend, what I wanted to say to my friends here in Lithuania, so a week doesn't look like it will be the best in terms of weather, but still, I hope you will have a beautiful week. To everywhere and anyone, wherever you are, have a beautiful week. We'll speak in just a week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.